We're going to speak briefly this morning in regards to not only the state of the Seacoast, but I'm going to talk a little bit about the state of the state and involved in national as well. So what's happening in national for the real estate community and us as realtors specifically. The past 4 years, we all know, has been a very challenging market in real estate. We've had tough times, but it's stabilizing. The good news is, when I listened to an economist this morning, and I've listened to many economists over the past 3 or 4 months between Chicago and Washington with national and at state, and they all pretty much have the same thing. It's stabilizing. There's caveats out there, but it is stabilizing. We've been given 2 sheets today which have some statistics in front of you. And the first one I'm going to go through with you is basically the unit sales and where we are today. As you can see, statewide in 2010, this will be, I think it's the third page of your handout today. In 2010, there was 1,070 unit sales year to date. 2011, there was 1,122. That's a 4.9, almost a 5% increase. Good news. Also, if you look, February, it went from 538 to 577, a 7.2% increase. Also good news. What's more important, this is the first time in a long time that we've had 2 years in a row, the same month that it's increased. Good data, good statistics, encouraging, in spite of a tough winter. We had, New England especially, we've had a tough winter. However, you'll also notice that the average sales price has decreased a little. Median prices are down a bit. That's not a bad thing. I know we all think they've gone down, they've gone down. Unless we're going to sell a house today, our own personal house, we haven't lost the income yet. But if you look at the year 2000, the average median price was $157,500. In the end of 2010, the average median house was $215,000. That's a $57,500 increase. Exactly what Jim was saying earlier about Warren Buffett. Home values do increase. We're not in this for a short term. If you buy a house to raise a family, to live there and stay there, your value has increased. I did some quick numbers. If you bought a house at that price in 2000, paid the $157,000, financed it for 25 years at a 7% rate, your present value would be, your present mortgage value would be $123,000. That's $91,000 that family would have in a net asset if they're still in that same house. Homes are a great investment, not only just out with the community. They're the best way of creating value, unless you have $140,000 per stock for Warren Buffett. So the numbers are there, and it's pretty good statistics. Also lower prices. A lot of us remember back in the heydays in 2005 when everything was selling no matter where it was, the prices were escalating. Lynn was on our public policy, will tell you. The cry in the state was affordability. We can't get people into the state for jobs. House pricing is too high. Today, it's affordable. The lowest rates, as long as I can remember, my first house was 1984, I think I paid $9.25. Lowest rates as long as I can remember, and affordable houses. Spread that word. I had a family in Bedford that they both had, I guess, service type jobs. They hadn't been able to afford a house for years, but they've been saving. They had good jobs, they had stable jobs, and they had their 20% down. They were finally able to get into a nice single-family home because they could afford it. So affordability may come down a little, but as long as those numbers I gave you earlier keep going up, it's a good thing.